Welcome, everybody, to News of the Money World. Today, we've got a massive one. We had to cull some things because it's just too much. So we have tentative mission accomplished on the inflation battle, perhaps, maybe, who knows. We have the new CPI data that's kind of done some stuff to the markets. We'll have a chat around what the market impact has been there. The Sam Altman drama, the story that's unfolded within a relatively short space of time, and Javier Milei from the new Argentinian pro-Bitcoin libertarian president. I'm excited to talk about that one and so much more. So let's get started perhaps first here with the tentative mission accomplished around inflation, because we're seeing this everywhere that seems like we're just turning the corner now and things are starting to go in the right direction. It's encouraging because that means that interest rates might come down, which means that our borrowing costs might ease up. But it's already kind of been factored into the markets, I guess. Do you want to just talk to us, I guess, Rupert, around what we're seeing play out now?
Yeah, so last week, I think it might have been Wednesday, the US CPI for September came out, and it came out at 0.2%, which was the lowest reading for over 2 years. And so it really gives credence to a lot of the data and a lot of the external things that we are starting to see, which shows, you know what, maybe we are getting to the end of the inflation bubble. We've started to see similar data out of the UK. They also had a very weak print as well. And so markets rejoiced. Markets went, awesome. This means all of a sudden we're very confident, we are increasingly confident that interest rates are at their peak. They're not going to go any further. And we're now starting to look again at a June 2024 start to decrease interest rates as well. And so a really, really strong shift. We've kind of been talking about this and seen this over the last 4 weeks, but this was the data point that really confirmed to everyone, we are done. We have won here. It's kind of the late 1970s, but who knows? Yeah. Hopefully this is real.
Well, yeah, hopefully it's not the repeat of that. But do you think that the markets have kind of gotten ahead of itself a little bit in anticipating a return to where we came from?
I think so. I think we saw, so on the day of that CPI print, we saw the Russell 2000, which is the small cap index in the US. That was at 4.5%. We saw the NASDAQ up 2%. We saw the S&P up strongly as well. And we've also seen medium-term interest rates come down by 30, 40 basis points.
Yes.
And so the markets have moved pretty quickly and have really kind of taken this as a celebration. I think one of the things that we have learned over the last 2 years, one data point does not make a trend. And so as we saw in the last Federal Reserve minutes and meeting, for them, it's all about the employment market. We have started to see that come off as well. Mm-hmm. And I think a lot of people see that those kind of 2 or 3 data points as being evidence that a soft landing is where we're coming. But to bluntly ask you your question, I think it's fair to say markets at the moment are pricing in perfection. They are pricing in the soft landing. They are pricing in a world where we kind of come out of this, unemployment peaks at kind of 5.25%, not too high. We don't really we have no recession. We might have a couple of quarters or a year or two of slow growth, but nothing much else. So it's definitely looking like a pretty Goldilocks scenario right now.
Yeah. It further embeds this theory, though, I think, that we seek perfection in markets in so many ways, right? And then that adds fuel to this Keynesian dynamic where we're trying to manipulate and control markets using monetary policy, which puts way too much power and expectation on central banks, I think. So I think that we almost need to stand back and just go, hey, are our expectations actually correct here? Should we allow markets to fail occasionally, to actually flush out and let the free market kind of creatively destroy all of the chaff so that only the good stuff is left? And I don't know if we're going to get a soft landing or not. Like I hope, just for continuity's sake, but maybe we're storing up a bigger problem later on.
Look, I think that's what we have learned over the last maybe we haven't learned it. I mean, I think we had thought that we had thought that low interest rates had created a series of bubbles and it was going to be impossible to come out of and had distorted the markets. I guess markets are telling us right now that's not what happened.
Yeah.
I think we can all agree that the loose monetary policy around COVID, it definitely created a huge amount of inflation and has created a huge number of issues. And we cannot underestimate the pain that 7 to 10% inflation over the space of 18 to 24 months has caused a huge number of people. But yeah, I think if you kind of look at where we are today and the current prognosis, central banks, everyone would be going, we've played a pretty perfect hand right now.
Yeah, that's right. And I got to give them credit, right? Got to give them credit.
What do we? I mean, I
No,
think.
no, we don't, Rupert. It's the
Well,
short answer.
yeah. Look, I'm not quite so convinced on that. I
Yeah.
think I personally think that there are still a lot of issues lurking under the radar. Where everywhere in the world we're starting to see consumer spending dropping off a cliff.
Yeah.
We are starting to see unemployment tick up.
Yeah.
My favourite news outlet, Bloomberg, did a great article a couple of weeks ago saying every time soft landing becomes very, very prevalent in the media, when they look back over the last 40 years, that's when a hard recession hits.
Yeah.
So I don't think we're quite there yet. But there's definitely a whole lot of high fives going on in a number of Federal Reserves and central banks around the world right now.
Yeah. I'd like to get like a whole team of all the central bankers standing on the deck of this aircraft carrier that George Bush, I think, stood on with the big
that would be amazing.
mission accomplished.
That just would be so great.
I'll get on Photoshop afterwards, but yeah.
I think we're probably being slightly unfair to the central banks, though, as well, to be perfectly honest, because, well, they have been fighting against a massive political storm. You've got central banks who have done a lot, but you've also got governments who have just been spinning up a massive storm. We talked about it last week. The US deficit running at kind of over 10% of GDP. We've got the New Zealand deficit running at kind of 7%. I mean, governments have made their jobs really, really, really tough.
Yeah, that's right. Yeah. Yeah. Okay. So let's now maybe talk about perspectives, right? So we in New Zealand, we have a lot of bank economists that will give a perspective on where they see interest rates are going. And what I love about that is that they all kind of have certain tilts, certain biases, which I think are actually really good and to be celebrated, not to be mocked or ridiculed at all, because what it does is it kind of unlocks a three-dimensional picture of what might be happening. And traditionally, we've seen ANZ kind of take one stance, and I've kind of picked up on this over the last couple of years, whereas on the opposite end of the spectrum, you could say, maybe one's hawkish, one's dovish, would be Kiwi Bank. And that's kind of almost inverted at the moment. And I find that fascinating. I'm not sure if that's kind of what you've picked up on as well, but any views on that?
Look, I think it is interesting kind of how some of those narratives have flipped. What I would say is probably more interesting is the market reaction to when ANZ speak versus when Kiwi Wealth speak,
right?
Kiwi Bank speak.
Kiwi Bank, yeah.
Where we saw last week, ANZ came out and saying, "Hey, look, our interest rate projections have come down a little bit. We're going to take that January rise off the table completely. We just do not think that's going to happen." And immediately you saw wholesale interest rates drop by 25, 30 points.
Yeah.
So sure. I think we have seen a really interesting reaction. That's why personally I was very surprised to see mortgage rates. Kiwi Bank announced higher mortgage rates yesterday because we have seen over the last week or so I think it's about 30 points have come out of the wholesale money market and some of those wholesale interest rates. But as you say, that's potentially because the Kiwi Bank economists are forecasting something a little bit different. But increasingly, it's starting to look like New Zealand is going to have those same global trends, and hopefully this all means that by back end of next year, we're starting to look at some lower interest rates.
Yeah, and my view on that, I think, is going to be that we're probably going to see a change in the mortgage rate yield curve.
Yeah.
It'll be potentially lower on the short end. So you might be floating and fixing for 1 or 2 years for a little bit lower. But I still kind of suspect, and I could be wrong, of course, hopefully I am, I suspect that the longer term fixed rates could continue to increase, which announces often the arrival of a recession, whereas a negative one predicts it, which we're still in.
Yep.
I think is kind of fascinating because normally we would just expect that short-term rates drop when a recession arrives. But I think in this case, it's actually possible that instead of this one dropping, we might get the higher ones increasing at a larger rate, just because of the potential geopolitical stuff where governments are going to be forced to borrow more. I think if things escalate, which could cause higher rates on the long end. Does that rationale sound from your perspective?
Well, I think, yeah, I do. I think that is right. I think we still need to figure. I think there's concern in a number of economies around what is the sustainable path for fiscal policy. At the end of the day, if governments have to keep on borrowing at 4.5%, that's going to be really hard. And so, yes, I do think that the fiscal path is going to has the potential to drive higher interest rates over time. Yeah. I think the biggest one for me though is we don't really know what normal looks like. We don't know what our start is or what the basis of a zero kind of a neutral interest rate is anymore, right? 18 months ago, we would have said a neutral interest rate was 2.5. Today, we've got people saying a neutral interest rate is 4.5. Interestingly, the 10-year yield is about that right now, which means that actually it shouldn't come down far from here. And so I think all of the uncertainty over the last 20 years, is there a new normal? And that's why I think people are going to be really gun shy about kind of that, plus the geopolitical stuff, plus the fiscal positions. I just think people are going to be really uncertain, and it's going to take a long time for those medium to longer term rates to come down.
Yeah. Ultimately, we, the taxpayer, or we, the citizens of a country, we pay for it, whether it's through our interest rate mechanism or through our taxation system. So, interest rates, inflation, or it's just tax. So we have to pay for it at the end of the day. Nothing's free. All right. Well, let's talk about something nice and dramatic, right? Like we had the SBF drama before, and that seems to be coming to a close. And just right on cue, we've got another drama that's unfolding, but this time in a much shorter space of time. Different Sam, but I don't know. Hopefully not the same character flaws as the first Sam, but certainly a lot of drama, right? So Sam Altman moving basically from OpenAI to Microsoft, as we've learned today, and a whole lot of stuff going on behind the scenes. So do you want to go first, Rupert, around giving the lowdown?
Yeah, some of the background. Look, this is an amazing story, right? And also kind of opens up a whole lot of visibility into a very opaque organization that no one really understands. So OpenAI, they are the company that's behind ChatGPT, arguably the most successful tech innovation of all time, based on the number of users that are using it at the specific speed.
Yeah.
So OpenAI, what's really interesting is OpenAI was actually set up in about 2014 or 15 as a philanthropic organization to help set guidelines and rails and develop AI, but develop in a safe way. Interestingly, Elon Musk was the one that kind of funded most of it at the start, but it's a charity. It's not set up as a private company. About 3 years ago, Sam Altman recognized and saw that actually it cost them a hell of a lot to run all of these models and to kind of run an AI world. And so the only way they were going to do that was if they had the potential to open up commercial revenue streams. Yeah. And so that was kind of the ChatGPT, and then they're raising a hell of a lot of money out of Microsoft and others as a way to kind of support and pay for that on the way through. The problem was the board and the company structure was all a bit weird. And so ChatGPT was part of OpenAI Ventures, which is a private part of this kind of non-profit, philanthropic kind of entity. And the board of OpenAI got really concerned. Also, the board of OpenAI got very concerned about how fast ChatGPT was moving, how they were kind of opening themselves up to more investment. They were opening themselves up to increasing products. They were about to allow ChatGPT to go into companies so that they can build their own versions of ChatGPT. And so all of a sudden, the board felt, hold on a sec, the purpose of why we are here and what we are doing is to set up safeguards and make sure that this is developing in a safe way. But actually, it's now going at such a massive pace that we've focused entirely on the commercialization.
Yeah.
And so what's amazing, and this is where it is just how a large company with $88 billion can get themselves in this position, I've got no idea. But apparently all this went down on Thursday. So Thursday afternoon, a board meeting was called where the board kind of talked about having some issues around this and the direction that Sam Altman was taking the organization. At Friday, I think it was at 2:00, he got called into a board meeting and told he was fired. By 2:30, a press release had gone out talking about how he was fired because of the board almost implying that he'd been lying to the board.
That's right. Strange, eh?
It's very strange. Clarification came out over the weekend that he actually hadn't lied to the board. He hadn't really done anything wrong. It was just a slightly difference of opinion. And so now what's happened is the ChatGPT staff have reacted very violently against this, and there's been a lot of kind of, it's going to be interesting to see what happens. But he's gone. The board have said there's no way he's coming back. They've even managed to, over the space of a weekend, hire a new CEO, someone from Twitch, the gaming company, and who apparently they've chosen because of the fact that he's been very public about the need for safeguards around AI and needing to slow it down.
Yeah. That's the weird part about this, right? Is that there seems to be two groups, like in so many ways. There's the altruism sort of piece, and then there's the corporate or the, I guess, the ambitious part. But then there is this safetyism, and then there's like the almost like, hey, we got to run with this now because we've just discovered something amazing. Even if it is dangerous, we got to run with it, right? So there feels like maybe that's part of this schism, right?
Oh, it's massive. But and then there's a third element to it, which is the cost. So the cost of processing data for AI models is humongous.
Yeah.
And so if you can't commercialize, and this was Sam Altman's view, if you can't commercialize it, you're dead.
Yeah, right.
Because you're going to spend many billions of dollars every year on processing power. And so this is kind of, it's unlike a lot of the social media companies and a lot of the previous tech worlds that we've seen. Actually, there's a massive marginal cost to delivering this service, and that is
energy, right?
Well, that's what we've seen with NVIDIA. It's all about kind of having processing power.
Yeah.
Effectively, though, and this is where I think they've got it so wrong, because you're going to end up in OpenAI being the altruistic version and potentially slowing things down. But then you've got Sam Altman, who's now gone and joined Microsoft, and they're setting up an AI division within Microsoft. I would put a huge amount of money on the fact that he ends up with most of the OpenAI engineering talent within the next few weeks. Yeah. And so it's going to be fascinating to see where and how all this lands. But I think this is probably the only description is this is a massive shooting yourself in the face from OpenAI board.
Yeah. And I think like the journey from a not-for-profit to a commercial enterprise often creates the most vicious capitalists from what I've seen in other examples, some local as well. And I think that that's something that it's almost inevitable, but it's kind of ironic that people start off wanting to do no evil, then yet become the very thing that they abhorred at the beginning. And I wonder where that goes for a start. But also, I'm curious around how that will influence. We talked about the Magnificent Seven last week, how this will influence the Magnificent Seven even more in terms of their performance, because clearly it's giving a signal to the market that this is a really important space. Technology is taking a quantum leap here, and people are jockeying for position, or organizations are jockeying for position because they can see the opportunity. Has the market overpriced it or underpriced this opportunity with AI is the question that I've been mulling over. Do you have a view on that?
Yeah, I think the first point you raised is a really interesting one, right? Which is the transition from altruism to capitalism.
Yeah.
And I honestly believe that here it was just reality, right? He couldn't achieve anything altruistic if he didn't have the capitalist part, which was providing all the money.
Yeah,
and I think that's what happens so often. Is that people start off with altruistic objectives and pretty quickly realize, a little bit like talking about this at work last week. You go to an award ceremony and apparently it's all about how well you've done. But it's also about how much money you've spent sponsoring the awards and how much you've done all of that kind of stuff. Because without the sponsorship, the awards don't exist. And I think that's why the balance is there, right? It's a really hard piece to mix.
Yeah.
So I think I don't begrudge Sam Altman for going altruism to capitalism. I think he just did what he needed to do to survive. I think that the big tech companies will be looking at this going, wow, this is amazing. I think this has actually given them a massive, massive, massive leap forward because ChatGPT and OpenAI, I don't know, they might have been, whether it be 3 months, 6 months ahead. But they weren't that much further ahead than the others. We're talking months here, not years.
Yeah.
And this is definitely going to slow down ChatGPT, right? So I think actually this allows the rest of the field to catch up. Who I do think it causes much greater concern for are regulators. Because I think if a board is willing to self-implode and blow up a company because they are so scared about what their products can do, a regulator has to take action. The Congress and the Senate, they have to kind of stand up and go, oh, fuck, maybe there is a whole lot here that we do not understand.
Yeah. Well, I was kind of almost thinking in my head when you were saying that, I was just imagining like a DC Comics or a Marvel Comics sort of plot, right? Where they've cracked the code, they've just discovered how to create sentient life. And maybe that's where the schism came from. Like, it's quite fascinating to kind of go down these rabbit holes. But I guess ultimately where we sit as everyday investors would be kind of like, well, how does this actually impact where our returns will be coming from? Because clearly technology is always the thing that mines wealth. It's the catalyst that goes out there in the universe and creates something out of nothing in the natural world. And I think that that's ultimately what we're doing as investors is that we're chasing where these tailwinds are so that we can build what little we have into something much bigger. And so as it relates to investing in tech, it's not just technology full stop. Technology it's got layers, right? And it seems like at the pointy head is AI.
And actually 100%, it is all about AI is where the future is. But the other thing that I'm thinking about as we're speaking is, to me, this gives me more confidence that the Magnificent Seven win in the future, because this form of tech is very different to the previous versions of tech, which is you made a piece of software and then everyone just came and used it, so you had zero marginal cost. I think this is the amount of money that has been spent on processing here and on kind of the need for power. You're going to need humongous balance sheets to win. You're going to need humongous data sets to win. And actually, Sam Altman's journey from altruism to capitalism, to me, is a sign that it's got the only people that can really win this battle. It's going to be the Microsoft, Facebook, Amazon, or Google.
Yeah. Interesting. It'll be interesting also to see what the large fund managers do when they decide that, hey, if Bitcoin was an unethical asset to own because of the power consumption, well, what about AI?
Pretty much the same thing. That's a great conundrum.
Yeah. There is not such thing, in my view, increasingly over the last couple of weeks. There is no limit as to how far you go when you employ some sort of exclusion strategy with ethical investing. But let's save that for another day, shall we?
Yes. Well, I think we saw that last week, right? Where one of the New Zealand KiwiSaver providers decided to jump on it and came out excluding certain Palestinian banks.
Israeli banks,
Israeli banks. Yeah. And it's been fascinating, the reaction, where I think they've kind of probably haven't got the positive tinge that they thought. But because I think our job as investors is not to be doing short-term reactionary behaviors to this kind of stuff as well.
Yeah, excellent. Well said. Hey, let's finish off on something kind of interesting, because this is ultimately where I think the ethical investing really should be targeted, is around the dollar system. And so the fiat currency system is effectively what we all operate under, where we use the dollars by decree from our government, from our nation state. Argentina has had triple-digit inflation for quite some time, and we have been complaining, say in New Zealand here, with relatively high inflation for a while. We have no idea, and therefore we probably don't appreciate the cure so much either. But recently we had, I love saying this guy's name, Javier Milei. I don't even know if that's how you say it, but that's how I say it. And the new Argentinian president that's been elected, he's a libertarian. He's short. He's got wild sideburns. He's like a really short version of Neil Young on acid is my impression. And I'm just really looking forward to seeing where else he takes his chainsaw, really, in terms of the central banks and the status quo. So yeah, like I think if they convert that economy from Argentina, like where there's crazy hyperinflation, by either moving to the US dollar or that and or Bitcoin, it's going to be fascinating. I don't know if you've had a chance to look at that, Rupert.
Yeah, look, I'm not huge. I've looked at the dollarization and a little bit of the potential for the crypto stuff there. I think I remember a conversation you and I had last year. Oh, maybe not last year, this end of this year. So anyway, a little while ago, where we talked about adoption of crypto and kind of where it becomes and replaces traditional fiat currency. And I think we both agreed at that point in time it wasn't necessarily going to happen in the US, or it wasn't going to happen in the Eurozone or areas where they've got strong, stable currencies. It was going to happen in areas where people don't trust their governments. They have got very unstable economic systems, and they just do not want to hold their own local currency. And potentially they don't trust the US, which is an ever increasing part of the world. And so I still stand by that. I still firmly believe that Bitcoin has a role, or cryptocurrencies have a great role in allowing individuals to diversify away from their everyday kind of currency that they don't necessarily trust and like. That might be completely different to how we think coming from New Zealand, where we moan about Adrian Orr in the Reserve Bank, but let's be honest, we don't really have any real problems in the scheme of things. And that's where I see this going, right? So I think you'll find a lot of Argentinians would much prefer not having the Argentinian peso. Are they happy in employing the US dollar? I don't know. I suspect potentially, but there will be a very large part that sits there and watches what has happened to Russia, to China, to a number of other markets where people can very quickly be blacklisted, accounts can be frozen. The US government has got a very long reach, and particularly when you're using US dollars, that reach gets very, very long. I think for a lot of people, Bitcoin is, and whether it's Bitcoin or another cryptocurrency, I think that has to be the answer.
Yeah, no, I agree. And the global South will probably get a leg up by doing so, in my view. And I think with Argentina in particular, like they were flirting with the BRICS network. I know that the Chinese yuan was kind of being involved there. So I know that this decision has probably kind of almost alienated them a little bit from a couple of other key players. And so it really just adds an extra dynamic when you're trying to understand the macro universe that we're investing in. It really adds an extra dynamic when you're considering the nation state moves at the moment, and as that relates to the financial system as well, because you have your portfolio, which might be invested in the US, the rest of the world, emerging markets, and then local. But then the other layer on top of that is really important to consider as well, because diversification isn't just about asset classes, it's about so much more. Awesome.
Oh, definitely.
I think we went overtime here, didn't we, Rupert? Sorry about that.
Oh, we have. Can I give you one last amazing story about diversification?
Please do. Yeah.
The one last one, which is something I read yesterday, which a market very large, but everyone has written off for a very long time. Japan. Japanese market is up 24% this year, year to date. One of the best performing markets in the world, a market that everyone had written off a very long time ago. And it shows the power and the importance of diversification, because you never know which one's going to be next. And so 100%, whether it be markets, asset classes,
fascinating.
You've got to make sure you have your feet in lots of boats, because when some tides rise, others fall.
Exactly. And even with the content that you consume. So thank you, everybody, for tuning into News of the Money World. Please share us. Please pimp us out to all your friends who want a refreshing, mainstream, yet contrarian perspective on current events. Awesome. Thank you, Rupert. We'll catch you in the next one.
Great chat.
Cool. All right. See ya.
Bye.